The highly volatile crypto market gives most investors a high risk, high return investment impression. Every other day, a coin surges 20%, only to go down 30% the next day. In addition to the spot market, most exchanges offer up to 125x leverage in the futures market, making the crypto market even more volatile. However, the inefficiencies between the spot and the futures market gives us plenty of arbitrage opportunities. This is by far the lowest risk strategy that you can find, but it's still easy to reach 50% in profit every year. Make sure to watch the entire video to understand everything you need to know about Spot-Futures Arbitrage Bots. Before setting up Spot-Futures Arbitrage Bots, we first have to define the difference between the spot and futures markets. See, most of the time when we are buying and selling cryptocurrencies, we do this on the spot market. It's simply a marketplace for people to make sell and buy offers for their cryptocurrencies. You accept someone's sell offer and you buy one Bitcoin, and you're the owner of that Bitcoin. Once you sell it again, the ownership will be transferred to whoever accepted your sell offer. In the futures market, if you accept someone's sell offer, you're not really buying Bitcoin, but you're buying a contract that simply reflects your buy price and the current price of Bitcoin. This is what's also called a long in the futures market. Basically, you're buying and expecting the price to go up. However, in the futures market, you can also go short, which simply means you're expecting the price to go down. The futures market is also very intriguing because you can use a leverage to trade. For example, if you have $1,000 in your wallet and you use a 10x leverage, then you can essentially trade with $10,000 and make 10 times the profit, but also 10 times the loss. When using a leverage, the position can also get liquidated, which results in a total loss of your investment. Let's say we have $1,000 in our wallet and we want to buy one Bitcoin at the current price of $10,000. For that, we can use a 10x leverage. If the price now decreases by only 10%, then our entire position will be liquidated, leaving us with $0 in our wallet. It works the same way when shorting. If we use $1,000 with a 10x leverage to short Bitcoin at $10,000 and the price increases by 10%, then our entire position will be liquidated. Let me know in the comment section below if you ever traded with a leverage before. In the futures market, there is something called the funding fee. As you can see up here, the prices on the spot and futures market are not exactly the same, but they are always a little bit off. Funding fee is primarily used to force the convergence of prices between the futures market and the spot market. Every 8 hours, if the funding fee is positive, all long positions pay short positions. If the funding fee is negative, then all short positions pay long positions. Funding rate consists of two components, the interest rate and the premium. Interest rate is fixed at 0.01% every 8 hours, and the premium varies according to the price difference between the futures contract and the spot price. If a futures contract is trading higher than the spot market, premium is positive. In contrast, the premium is negative if the futures price is trading below the index price. We can check the historical funding fee on CoinGlass. As you can see here, most of the time the funding fee is 0.01%, even though the market has been going down for the past few months. Overall, funding fees are higher if the market is bullish, lower or can also be negative if the market is bearish. Now that we understand how the funding fee works, let's see how we can take advantage of that. Let's say that we want to invest $10,000 in a Spot-Futures Arbitrage Bot on Bitcoin. Bot will take $5,000 and buy Bitcoin in the spot market, and at the same time it will short $5,000 of Bitcoin in the futures market. This way it creates a market neutral position. It doesn't matter whether the price increases or decreases, because in both scenarios we will not make a profit or a loss with our positions. But every 8 hours we will either receive or pay the funding fee in the futures market. As already shown before, the funding fee is net positive, which means that our short position in the futures market is generating profit every 8 hours. For example, if the current funding rate is 0.05%, then you will get $2.5. If the funding rate remains at 0.05%, we can get around 27% annual returns. We can also increase the returns by leveraging our short position. If we open a short with a 2x leverage, then we're able to buy $6,666 of Bitcoin in the spot market while shorting the same amount in the futures market. In this case, we would receive 33% more funding fee compared to a 1x leverage. If we use a 3x leverage, we could even buy $7,500 in the spot market, short the same amount in the futures market, generating even more profit. Now, before you get too excited about leveraging your profit, let me quickly explain the risks. When using Spot-Futures Arbitrage Bots, there's really only one risk that you face, and that's the liquidation of your futures position. When using leverage, your liquidation price will be easier to reach, meaning that the bot will stop sooner if you use a higher leverage. For example, if I set up a Bitcoin arbitrage bot right now and use a 1x leverage, then my liquidation price would be around $39,000. But if I used a 2x leverage, then my liquidation price would be around $30,000, and with a 3x leverage, it would be around $26,000. Yes, the bot would generate more profit, but it would also stop sooner and needs to be created again because the bot will automatically stop and close the positions if the price nears liquidation. Keep in mind that more leverage also means more profit, but also in a shorter amount of time. Like every other bot, before setting up a Spot-Futures Arbitrage bot, I recommend backtesting and analyzing historical returns. For this, you can simply download the history of funding fees on Binance. Once downloaded, make sure to format the file properly. After formatting the file, you make all the calculations you want. For example, on Bitcoin, the overall arbitrage profit since the inception of the futures contract would have been around 55% profit. Using a 2x leverage, it would have been around 73% profit, and by using a 3x leverage, it would have even been 90% profit. Keep in mind that this will not factor in any fees that you have to pay when creating the bot, and also will not factor in the liquidation of the futures position. From my past experience, the coins with the best returns have been high market cap coins like Bitcoin, Ethereum, and BNB. I will definitely avoid new coins and highly volatile coins as they can even return a loss. To create the Spot-Futures Arbitrage bot, you need to sign up on Pionex. If you don't have a Pionex account, make sure to sign up with the link in the description below. Once signed up, make sure to deposit some USDT. After depositing, navigate to Trade and click on Create right next to the Spot-Futures Arbitrage bot. Here you can select the coin that you want to arbitrage. You can also check which coins are available for leverage, sort by the funding fee or by the APR over the past 7, 30 or 180 days. After choosing your desired coin, make sure to unfold the advanced settings to select the leverage you want to use and input the price gap control. By hovering over the leverage, you can see your estimated liquidation price. Use this together with TradingView alerts to get notified when the liquidation price is hit. You can also input a price gap control, which is the difference between the futures and spot market price. Only if the gap is lower than your specified price gap, then will the bot start. Last but not least, input your desired investment and then click on Create. Now it's gonna take 1 or 2 minutes for everything to set up. And once it's set up and the bot is created, you can see it on the trade page or on My Trading Bots. Here you can see a history of all received funding fees, the overall profit, as well as a prediction of the next funding fee and an APR calculation. As always, let me know if you enjoyed the video by leaving a like and a comment. Enjoy your profits and see you next time. Bye.